Hit record. All right. Hey, everybody. This is Bill and Rakesh. We're going to talk a little bit about trading. Welcome to the call, Rakesh. Good to hear from you again.
Thank you, Bill.
So exciting things going on in Bitcoin. So first thing I want to do, two parts for you guys. Some of you are going to get one part. Some of you are going to get both parts, depending on what group you're in. But I want to talk to you a little bit about trading philosophy and what I'm doing right now. So we had some news. First of all, we were kind of in a downward trend anyway. And then we got some news from Korea. And South Korea made some notifications that said they were going to ban cryptocurrency and that they were going to close down the exchanges and all this stuff. Find out the rumors are just rumors, that they really haven't said that. They're looking into cryptocurrency. And I'm really not concerned whether they ban it or not. What happens in those bans is we see a short fall, which if you're ahead of it and you sell and then buy back on the bounce, then I made a lot of money the last time China banned it. It was a good deal for me, and then it shot right back up again. So we had a little dip. Not sure, never really sure exactly why things are going the way they go. We're just assuming that it had something to do with that. We had a little bit of a bounce, and then a lot of the news came out and said it was just a rumor. So it started to come back up again. So what I did and what I'm recommending is I sold 30% of my holdings at 14,950. So my fill here, I sold one Bitcoin because I trade on different platforms. So on this one I had 3. I sold 30% on this one, and this is the one that I used to show you guys. I sold 30% of my Bitcoin at 14,950 because normally I would sell more expecting a bounce, but I don't see a strong wall here for the sell-off. You know, a lot of times I'm actually looking for 3 different things. I'm looking to see the volume. I'm looking to see whether there's a strong wall coming up at the new sell point, and I'm looking to see the trend that's currently working. So what I am seeing in the trend is I'm not 100% sure that we're going to bounce here at 15,000. We might, but we might not. So if it continues to climb and we jump up to 15.5, which is probably the next real bounce, if it doesn't stop here, then I'll probably sell my other 2, and I'll be pretty close to 100% of all my trade here at 15.5, expecting that it will not climb to 16 without making some kind of correction. So that's my current recommendations for you guys. That's what I'm doing. You guys can follow along on the Facebook page to see what I'm doing. Rakesh, what do you think about that?
Your initial sell was correct, Bill, but I think with the way Bitcoin is rising right now, the latest candlestick that you have, it's a very strong candle.
Right.
It has broken above some resistances. You can see the resistances around the 14,700 mark, if I'm not wrong. It has clearly broken through and on a decent volume. So I expect it to cross the 15,500 mark. Somewhere around 16,200 or 300 should be the target. We're looking at this chart as of now.
Right.
So if I would be trading, I would sell one more at 15,500 if I find a resistance, else I'll just hold it on and I'll just trail the stop losses higher. This is what I would do. But you are better because you keep doubling your money. So I think you should stick with your trade.
Well, I appreciate any feedback because you're looking at different signals than I do. So you seeing that there's a resistance closer to 16 instead of 14. I just love doing this. And one of the things that I do is I hedge my bets. So, I could sell all 3 now and just hope that it goes up. But I think what I'm going to do is hold on, sell the one. If it goes to 15.5, I'll sell a second one. If it goes to 16, I'll not only sell all these, but I got another 10 in reserves. If it goes to 16, I'm selling everything I have.
It should go to 16.
Yeah, if it goes to 16 through the night, I'm going to sell probably 13 to 15 coins and then wait for it to come back because I really expect it not to go much further than 16 and come back down to the low 15s.
Yes, it should not go more than 16. So 16 is the upper target. That's the maximum I see it going as of now. Yep. And it should again be back to around 14,500 levels after reaching 16. So that would be a nice trade for you.
That would be a nice trade for me. I'd be really happy with another $1,500 cha-ching.
Yeah.
All right. So appreciate your feedback. Daily calls, people really appreciate that. I want to talk a little bit about some advanced analysis and maybe some training. And the first thing we need to do is we need to start looking at some of the tools. And one of the things that you recommend is this trading tool. I started using it just a couple days ago. I saw this. I see a lot of other traders using this tool, so I subscribed to this one, which is BTC USD, which is Bitcoin compared to the US dollars. So let's give some people some basics. So I'm looking at this screen. It looks a little similar to what I just saw. You know, it's got the up and down candles, and it's got the little wicks that show. This is actually nicer because I can do this. I mean, I can look forward and back. I don't have any any of those controls at all with GDAX. So if you're serious about looking at trends that are more than just 24 hours or 48 hours old, that's a really cool tool. I just scroll my mouse up and down, and I can zoom in and look at trends. The candles, we talked a little bit yesterday about what the wicks mean. So what other tools you want to show me here? What would you do as a newbie?
For the newbie, first thing I would want him to recognize what the trend is without using any tools on the chart. That should be the first thing that any trader should be able to identify.
Right.
Whether the asset class they are looking at, whether it is in an uptrend, it is in a downtrend, or is it in a range. There are only three possibilities. Either something is going up, down, or it is stuck between two specific points. So the first thing that anybody needs to identify, that is the most basic and the most profitable way to start trading, is to identify that. If a person is absolutely new, has never opened charts, I would prefer to go to the line charts. You can just click on the candle that is there. Yes. Yeah, you can use the line. Yes. You can darken the line also. You just double click on the line. Yeah, you should. The line, there's a square box. Oh, not same one. Just open that. Please click it again. Yeah, you have style, price source, type, line. Just move left, left, down, down. A little lower. Yeah, just line. Yeah, you just next down. Not that. The left one is style. The next is price source. Then type. The fourth row. Yeah, just drag it up. Drag it. Yes, please. Yeah, now you have a darker line. That should be good. Yes, please click OK. Yeah, now it's a bit clearer. Yeah, this is the first thing that anybody should watch at. If he's a newbie, it's very clear that it was in a very strong. Just zoom out. Yes, a little more. Yeah. This is from August. Yeah, this is good enough, Bill. So the first thing we look at, it is in a strong uptrend. But since the last 15 or 20 days, the uptrend seems to have taken a break. So if the traders can identify that, okay, this is something that has been going up, it has come down in the past 15 days. So there are two possibilities. One, it will bounce right back up and continue in the direction that it was moving, that is up, or it will start correcting and start moving down. So that is what needs to be understood. Now for that we use trend lines, but here as the rise has been very sharp, it's very difficult to draw a trend line like the one you've drawn. It doesn't have too many supports on it.
Right.
So we'll not use this trend line, Bill. So the second option, you just come to the left side of the tool here, the lowermost one, left side, lowermost. Yeah, just click on it. Just next down, the next one. Yes, please remove all drawings. So your drawings are removed.
Okay.
So as we cannot draw trend lines, this the next most popular tool that is used is the Fibonacci retracement tool. Are the readers, do they know about the Fibonacci series? Otherwise, they would have to Google it, Bill. It's a very famous series by the mathematician. It follows a certain pattern. And in technical analysis, we have found that the retracement levels, you will just open the tool and it will be a little easier for them to see. On the third one from top, Bill. Yes, just right click on the, that's a pitchfork. Yeah, the aura mark, yeah. Down, scroll on. Fib retracement, a little higher. Yeah, that one, yeah. Please click it. Take it to around 3,000. Click it once at the 3,000 level. Yeah, and just drag it up higher, till the highs, till around 19,000. Yeah, now leave it. Yes, this is a tool which we very frequently use. This is the rally. This is the latest rally, which started somewhere around September from the 3,500 mark all the way up to 19,000 mark. So now that the correction has started, the pullback has started, these levels that you see on the left, 0.236.
Right.
Yes, lower below is 0.382, lower below is 0.5. These levels are the ones which are critical because we find traders usually buy around these support levels. They expect these support levels to hold. So the second one, 0.382 and 0.5, there is a 50% correction. These are the ones where we see a lot of buying. As we are seeing the line chart, we don't find the buying here. But if we just click onto the candlestick chart for one moment. Yes, now you can see the 0.5% exact, that is round about the low that formed on where we find buying. Yes, exactly. Now next we find a lot of buying at the 0.382 level. No, down, Bill. Yeah, from there, 0.382, we see a lot of buying. These two supports have now held. So the next best logical conclusion is people who have purchased here, they would want to push the prices higher. So we expect prices to keep moving up. Now the final resistance is around the 16,400 mark, right where you are holding, a little higher than that. Yes.
So where do you get the 16,400 projection from?
We don't see the projection. That is the candlestick intraday high.
Right there.
Yeah, that one. Yeah, that one, 16,460. So what happens is people who have purchased here around that 16,460 or just around the 16,000 mark, now they are under loss. They are under loss of say $1,600. So they want to at least sell their holdings at break even. So when price bounce back here, people who are under loss, they just want to get out of their holdings. So they sell at the 16,500 mark so that they don't incur a loss. So that is where we find some resistance creeping in. Once that is taken out, then again, the next move is up to the highs, 19,200 mark. So first thing, identify the trend. Second is learn a little about the Fibonacci retracement tool. That's easier. Now, on Bitcoin, it's difficult for us to draw trend lines. And also I see there is something called as a head and shoulders pattern. Are you familiar with that, Bill?
Yeah, so this would be the head up here, and then
Yes.
the left shoulder is over here, and we see
Yes.
the right shoulder
Absolutely.
a little bit lower.
Absolutely. So this is a bearish pattern, but this comes into play only when it breaks down something called as a neckline. You can draw the neckline around this 13,500 mark. Just go on top. You see the left, higher. Yes, just click there. You will find a horizontal line. Yes, just click around the 13,500 mark. Just click it there once. The line is formed. Just double click on it. It's a little lighter in shade. We'll just darken it up. You can change the color, will you? Yes, perfect. Yes. So this is a head and shoulders, as Bill explained. We have the head, that is the highest portion. That one, where Bill is pointing his cursor. Then we have two left shoulders, one left shoulder and one right shoulder. There are the two shoulders. Now this forms a bearish pattern. Studies have found that once price breaks down of the neckline, the 13,500, you can just, this is an approximate figure. Some people would have it a little higher. Some people can have it a little lower. This is not an exact number that you have to draw it at 13,550 itself. That depends on the trader and what he has been following. But this is about the place where the neckline would be. If price were to break down below 13,500, then they would expect huge selling. Retest of 11,000 and probably lower than that. So this is how we start. So for today, I think they can learn about trend, uptrend, downtrend, or the range. Here we have seen only an uptrending market with a pullback. Second, learn a little about candlesticks, how to watch a candlestick. The other day also we had spoken a little about candlestick and all the long wicks. We'll just take one candlestick here, Bill. Yeah, the whole we'll just keep it at that way. Yes. The topmost and the lowermost are the intraday range, the complete range of that particular day. Starting from there, you can see the high and the lows on top, Bill. 15,474.19 was the, yeah, that on the top.
Right.
And the low was 13,500. So the Bitcoin traded between 13,500 and 15,474 on 28th of December. So that is the whole range which one candlestick shows. Now we have the body of the candle, the darker portion, the red portion that we see. The top portion is the opening price. Whenever the market falls, we have a red candle. Whenever the market rises, we have a green candle. The top is the opening price for the day. In this case, it is 15,390, and the market closed lower at 14,470. So this is how a candlestick is formed. Outside of the opening and closing price would be the intraday movements, which are the long wicks that people find. These sometimes are very confusing. You have a long wick on top, you have a long wick on bottom. The long wicks in the bottom show that buyers, they use the intraday dips to accumulate long positions. In the sense, they bought when the prices were falling during intraday. Just zoom out a little bit. Yes, you can find all these lower wicks. Yeah, on that day, it's a huge fall intraday, but smarter people were buying instead of selling at the lows. Zoom out for 2 days later, and 24th also we find whenever 24th of December, Bill. 24th of December. Yes, again markets fell intraday, but smarter people were buying instead of selling. So whenever we have a long wick at the lows, it shows that buyers are keen to buy at the dips instead of selling in a panic. So that is usually a bullish sign. Do we have a long wick on top? Yeah, I think 21st we have a wick. 21st of December. Yeah, we have some selling at the highs. These are the smarter traders who were selling when everybody else was buying, which led to the next big panic fall, because all those people who purchased around about the 16,000 to 17,000 mark, they had to bail out when the market started falling.
So one last thing I'd like to ask you is, right now we're showing it on the day.
Yes.
What would be the advantage to looking at it on the hour or on the day?
No, initially, as the traders are new, the hourly chart would be very confusing for them, because the movements are very fast. For somebody who's experienced like you and who's got a hang of things, hourly is a nice place, or an hourly is a nice place to trade. But for somebody who's starting up, it's always the larger time frame that we suggest, so that once they know the slow movements, when they can identify them on the dailies, then we again get it down to the 4-hourly chart, then the hourly chart, then the 5 minutes intraday chart. So it's similar to that. Basic is always better when they get into it. on the dailies bill, so that there are less fluctuations. You don't get, once you sit in front of the screen, you see the fluctuations, market going up, going down, you tend to keep jumping in and out. You keep losing money. Here, you do your analysis in the evening, you write down certain levels, hold on to it. The next day, if the levels, they break, you just sell. If they trigger your buy and just hold on. For somebody who's experienced like you, then an hourly chart is a good one to trade with.
So I want to recommend you guys, if you're new to my training, you're going to hear me say this 100 times a month, and that is don't trade emotionally. I mean, if you can't do it and you panic when it starts to fall, or you get overly excited when it goes up, don't trade. Let somebody else do it for you, or take the advice of somebody else and take little bites. Don't be jumping in and out. I have people that almost have nervous breakdowns because they're buying, and they're almost always making the wrong choice. So come up with a strategy, play it out, let it ride. And worst case scenario, I mean, if you're not sure, then just hold. Just buy your Bitcoin and hold, because I really believe that in the long run, we were before this last push, we were doubling the price of Bitcoin every 90 days. There are no better investments than that. So in worst case scenario, while you're learning, just buy as much Bitcoin as you can afford and just hold it. Even if you're buying at this high price of 15,000, 16,000, just hold on while you're learning. And then don't panic. Like I show you guys, as you're trading, you are going to make a couple mistakes. And if you just follow the command, as long as you make more wins than you make losses, I usually win about 8 out of every 10 of my trades. So if you win more than you lose, then don't worry about losing once in a while. You got to take a little risk once in a while. So stay tuned to our training. Rakesh, thanks for your time. I appreciate your wisdom and your experience in this space. And we will talk again soon.
Yeah, thank you, Bill.